Are you curious how inflation is affecting our market? Well, in this video, I'm going to talk to you about inflation, interest rates, and inventory, and how our real estate market in Reno and all across the country are being affected by these three things. So let's go ahead and take a look. Let's talk about inflation first, and we talked about this briefly last month, and I wanted to just go a little bit more into it in regards to inflation. Obviously, inflation going too fast is never a good thing, but I do want to show inflation. In most cases, home appreciation has been outpacing inflation. So your money is actually gaining more value when you have it invested in a home versus sitting in the bank losing money thanks to inflation. So that's great news. But if you look at it in terms of if you're a renter, you can see that green line there is actually rental price appreciation. So we all know rental rates have been going up, and inflation has been going up as well. But you can look and see that in most cases, rental price appreciation has been outpacing inflation most times. That green line is more often above the blue line versus below it. So that's why it's always a good opportunity to invest in purchasing a home. All right, let's talk about the second I, interest rates. This was as of yesterday, February 10th, and it was at 3.69% interest rate according to Freddie Mac. Just today of filming, after making these slides, they have spiked even more, getting closer to that 4%. So they have been spiking more and more, and as you can see, we've been going up a lot. Taking a look since 2018, you can see where we lie, and we are back to 2019 level interest rates. Last time we saw these numbers. So interest rates have gone up, and I don't want that to worry you. Why that is? Well, you can see over the past history, over the last few decades, we're still less than we were in 2010, any other decade. So it's still significantly cheaper. You look back in the 2000s, back in 2006, 2005, back at the peak of the market when home prices were record home prices there, just like we are now. Home interest rates were over 6% then. So we still have significantly better affordability in terms of where we were last time the market was at record highs. I wanted to show briefly just some expectations of where the market is going in terms of interest rates and how we can predict them. So traditionally we can see that a 10-year treasury yield, a lot of times interest rates actually follow that. So in this graph here, you can see that the blue line right here, it's been going up since December of 2021. And if you look at it in comparison, over the last few decades, compared with a 30-year mortgage interest rate, they follow each other very symbiotically. So it's very much so, they follow just a spread of 1.7 on average. So with that said, you can see at the end of 2021 where the yield is going, and of course now we're following it. We see the interest rates going up. We anticipate this to continue to trend upward throughout the year. Speaking of which, here's the mortgage rate projections. Now notice this says January up there. I looked today, I was hoping today before filming I was going to see some updated numbers on this. They have not updated it yet. So with that said, I anticipate next month's video we're going to have some higher prediction numbers on here, because like I said, we're at 3.69 as of yesterday. They've gone up higher since then, and that puts us between this third and fourth quarter already in terms of predictions between the average of the all four. So with that said, we're going to likely see interest rates go up higher. We're going to see more in the four. I wanted to point out one quick thing on these interest rates. You may notice that they're still relatively low, and if you've applied for a loan, you're likely getting a loan that's higher than this. This is kind of almost the base rate, and your loan provider is going to have a higher rate than that because obviously they have to do business, right? So in most cases, you're going to likely see most interest rates quoted at this point. I'm seeing in the fours at this point, unless you're paying down, buying down the rate a little bit. So just know when you're going into that loan consultation with a mortgage loan officer, which if you need a recommendation, please let me know. I'm happy to get one for you. And with that said, they're likely going to quote you something in the fours. And it just depends on all the qualifiers in there to see where you qualify. Now let's finish with the third eye of today's video, inventory. With inventory, we're looking, if you haven't seen last week's video, be sure to click on it up in the top right corner right here, where we did talk about our critical low inventory here in the Reno Sparks area. But in terms of nationwide, where are we? Well, record low as well nationally. We just got the last numbers for December of 2021, so we can complete the year in terms of numbers. It always lags. And 1.8 months supply of inventory versus last year it was 1.9. So it did beat that out. That is critically low across the country. So we are seeing this low inventory shortage across the country. And while that can be a little bit worrisome, I do anticipate inventory levels to rise for this year. We have a lot of new construction. I do anticipate home buyers or home sellers to feel a little bit more comfortable to put their home on the market. And so I think we should be seeing that go up. Now with that said, how much can we go up? Well, look at it where we were back at the crash, our last housing crash. Well, you can see where our inventory levels were up in the 9, 7s, and 8 month supply of inventory. Now, our goal for a balanced market is between 5 to 7 months. And so all of those were all buyer's market because they were above 7 months. And right now we're obviously very much in a seller's market, down in a 1.8 month supply. With that said, you can see we've got some room to grow and we do need it. So while we might, and hopefully, fingers crossed, see inventory levels go up and we see those numbers go up, we have a wide gap between where we were in terms of a housing crash. So just feel comfortable with that. And as those inventory levels rise, I do anticipate our home prices here locally and across the country to kind of stabilize a little bit more. And so we're not seeing big price jumps like we did see in January this year here on Reno Sparks. I hope you guys enjoyed this great information. If you have any questions, I'll put my contact information in the description box below. Please reach out to me if you have any questions. I'm more than happy to answer them for you. Be sure to hit that subscribe button if you haven't already, and watch my other videos right over here, including last week's video here about the Reno Sparks market. Thanks so much for watching. Have a great day.